Hey, welcome to the Trading Group 1 meeting. Today is the 21st of July. Today's actually the Belgium Independence Day, like their 4th of July. So happy Independence Day, Belgium.
Yeah.
Tim, you said you were getting back into getting your feet back in the market, I guess, doing some butterflies or
Yeah,
spot.
I've got two different butterfly trades on the same strategy, but different trades.
Oh, do you mind sharing them?
Yeah, I can. One's I'm just finishing getting set up here for that. Okay. Well, so what I'm doing, you know that I've said that I'm not going to do road trip until VIX gets below 20 and stays there,
Right.
and I still feel that way. So I'm not doing road trip um, directly, but it's similar. Okay, let's see. SPX. Yeah, okay. There we go. Getting my login going here. Okay, let's
Looks like
see.
VIX is getting there, like 24.6 or so.
Yeah, it's inching there. You know, we'll see if it stays there, but it's inching.
In
Okay.
fact, I'm looking at a VIX chart. It hasn't been at this price since the 5th of June.
Okay. All right. Let me clean up some of this junk. Can you see my screen?
I can.
Okay. Let me clean up all this stuff. So it's be slow. Why don't you? Okay. Computer's going to be there. We go. So first of all, I'm trading the Russell because the commissions are too high in SPX anymore. So I
It's a
moved over
shame,
to
isn't it?
Russell. Yeah, that's too bad. But um, the way I look at it is they told me they didn't want me to trade SPX anymore. So
Essentially, yeah.
all right. Now I can load my trade. So I'll load. I got two. I'll load the first one. Yeah. Okay. So much stuff. Okay. Here we go. Let me go back to the beginning. And this is the butterfly portion of this trade. It's basically a balanced butterfly. Um, and RUT was at 1474 when I loaded it. So I'm like road trip. I'm doing it out of the money a little bit, above the 10, but not quite so far. Um, and um, like road trip and other butterflies, it'll have a sweet spot here. If we go forward, I don't know, month, something like that. You can see the T-plus line is profitable clear up to about here. You can see that. And very importantly to me, it maintains the butterfly effect to the downside. It has a rising T-plus line with negative delta on the butterfly. I don't want to lose that. I want to keep that. That's what makes me feel safer if we have a big drop. So I go back to today. And then I don't want to take Vega risk right now. This is my major change. I have lost road trip trades when I had, some bunch of negative Vega and we had a big downturn, and it was painful. So even if you have negative delta sometimes on the road trips or other butterflies, if you have a lot of positive Vega and there's a big downturn, the Vega overpowers the delta and your P&L goes bad and can even get down to max loss and take you out of the trade. So I decided that I was going to neutralize Vega here, and I did that with this diagonal. Now let me just show you the diagonal component by itself first. This is a put diagonal, but if you look at it, I am selling the high strike and buying the low strike. So it's like a put credit spread in that respect. And by doing that, it skews it to the upside a little more, just a little bit, than to the downside. I could easily have done this with a call diagonal, and it had almost all the same characteristics, almost all the same Greeks. But this is what I did. I think in the future I might actually do call, because then I don't commingle my puts. I have a easier time of knowing which was just the diagonal, but it doesn't really matter. And the other important thing is by skewing it to the upside, I got a break even on the diagonal clear up here at 1593, and I think if I remember right, that holds. Yeah, that holds clear through to the end of the trade. So I might not need to adjust the butterfly to the upside as soon as I would otherwise because of that.
Oh, a
And
nice thing with the puts, if it stays up where it is now, those will expire worthless. You won't have to close them.
that's exactly right. Yeah, I guess I like doing puts, you know. So um, you can also see from the P&L, the diagonal by itself will probably be a good trade, and it's got such a wide range of profitability. I mean, profitability on the diagonal is 1688 and 1376. That's 310 points. Um, that's a wide. That's wide.
So
And
what happens? What happens to the thing if the VIX drops to say back in the teen range? Say the VIX drops like 10 points.
right, the diagonal itself will get hurt by that because it has positive vega. I guess we can simulate some of that. So let's say we have a minus 10% in volatility. It changes the graph a little bit and it changes the profitability, but instead of 600, I have 200 here. You know,
And that's a pretty big drop.
yeah, I think this if it was 10% would be a pretty serious drop. That's more than 10 points on the VIX. That's a big drop. So I'm not worried about it so much, but if this was its own trade, I might be a bit more worried about that. But basically, the diagonal is a hedge. So when I put them both together, it creates this slanting upper line of the tent here. But I have the sweet spot of the butterfly there that's going to kick in. So if I went forward to August 31st here, you can see that the butterfly is also contributing to the P&L if we're at this price point by the 31st and this volatility point. But I still have an upside break even of 1574 and a downside breaking even of 1290. So it's now almost, well, it's 290 points or something. It's still pretty wide. And I still have this butterfly effect later in the trade. And that's my plan. So I might not need to actually adjust this trade, which would be nice. Now, if so, I'm back to today and I'm back in the trade. If the market zooms down from here, like if it gets to in this range somewhere, I'm just going to close it. And I expect that I would have at least some profitability there depending on how fast it does it and when it does it. Because my Vega is neutralized on this trade, I have 0.36 Vega. I'm not going to have volatility effect. And I have negative delta a little bit for a while. That'll turn into positive delta somewhere, but not down till about here. So I have all this downside safety that makes me not have to worry about the trade on that. To the upside,
Well, the market's looking pretty strong. I mean, just if I had to guess, I'd say it's headed higher.
I would agree actually now. I would not have said that a week ago, but I mean, the market, I think, primarily optimistic about the vaccine probably that's being tested.
I guess
Um,
there's a couple of them.
yeah,
Oxford's got one too, I read.
yeah. So what am I going to do if the market zooms up? I'm probably not going to do anything until about 1520, 1530, and then I think I'll do some small adjustments similar to what we did on the road trip. What I think I'll do is I'll roll down some of my butterfly top longs. So let's see, I have 1460s in this trade. So if I go to, let's just model that. 1460s, and we're gonna sell a vertical and roll it down to 1415, get credit. That's the standard reverse Harvey. Remember all that?
Right.
Yeah. So I still would have a little bit of negative delta. I'm still pretty neutral on Vega. This is only one lot, of course. Now my break even has gone up from 15, 10. I'm looking at the expiration break even. I think it's that one. Yeah, to 15.25. And if that should keep happening, I'll start pairing this one off to thin it out. And remember, the diagonal should be good up until about 1580. And if it gets that bad, then I'll probably just exit for whatever I have at that time. Pretty simple, really. I could do I could do call credit spreads, which I don't want to do in an up market. I could do a lot of the other adjustments that we used to do, but this is the simplest and most effective one, I think, for this time.
Is there a point where you would take that diagonal off and just go back to a straight butterfly?
I don't think so, unless I was maybe I have to think that through some more. But if it was really late in the trade, and I don't plan to stay that late in the trade. Let's say it was 1 week expiration, and we're up here somewhere. Let's say we're at 1560. Put a price slice there. If I remove that diagonal, well, it's hard to simulate what the price would be, but I would still have to do something to the butterfly because this line's below zero and I'm getting out of the sweet spot. So
Right.
I definitely do something to the butterfly. I'm not sure if I take the diagonal off. What I might do instead is convert the diagonal into a credit spread. And that's easy to do. You simply buy the short back in the front month and sell the short in the far month, and that's the definition of a calendar. So I'd buy a sub trade. Yeah, I'll model it, but the prices are all wrong. So I'd buy the 1460, and I'd sell the 1460. Did I do that right? You get a lot of credit for it, and now if I took the butterfly out and showed you just the diagonal, now you can see it's clearly a put credit spread.
That one's looking good. Yep.
So, and that's got nothing to the upside. So it'd be that's probably the adjustment I do the diagonal, but I wouldn't probably do that till it's really late in the trade because I would lose some Vega. Yeah, but I wouldn't want to go negative Vega even then, especially then, because if we're way up here, it might pull back. So this is I can't say I back tested this for 10 years, although I might do that, but I'm just managing it by the Greeks and doing it relatively small. I'm not going for the gold here.
And then that symmetric butterflies keeping your downside risk under control too.
Yep, I want a trade that has little to no downside risk, and handleable upside, I guess you might say. So I've done this trade. Let me clean it up again. Go back to today. I wouldn't plan to stay until 7 days of expiration. I'd want to get out by about 3 weeks.
And how far out are you putting these on? Like 2 months?
About 2 months, 2 months to 70 days, something like that. This one was 65 when I opened it. Clean my graph up. Now we're back to current conditions. So I liked what I saw here, and so I added on to it 2 days after I opened it. So I've got this up to about an 8 lot total. And it was up to about 500 yesterday. It's up only about 100 or so today. I'd say that's probably got something to do with the volatility today more than it's got something to do with the negative delta too. Sorry.
Yeah, VIX is only down a little bit today.
Yep. Yeah, I'd say we're not. I mean, yeah, okay, so the market's optimistic, but I would say we're probably not out of the worry from earnings and some news events, so we could easily have a big down day. Um, so that's that trade, and then I put another one on with slightly different expirations, but it's all the same idea. Uh, Yesterday was it? I think it was yesterday. And this one's down a little bit, but I'm actually going to probably add on to it again today. A long time ago, I traded SPX butterflies where I'd put one on near the money, and then about 4 days later, I'd just had another one near the money wherever it was at that time, and I had actually pretty good luck with that. There was no anything else, none of this fancy stuff, none of this multiple adjustments, and that worked very well. But if the market moves, I do believe in adding on. It's like averaging in or averaging dollar cost averaging almost.
Right.
Um, Another interesting thing is it says I have a $2,000 margin on this, but that's not, when you're doing it like this, the maximum risk and the margin are disconnected, you might say. So this is not what my maximum risk is. My maximum risk would be almost 5,000 if you look down here. And that's more in line for a trade of this size.
And that's a Reg T margin.
Yeah, Reg T, right? I'm not using portfolio margin. So we shall see how I turn out.
Yeah. I see Dan's here. Hi, Dan. I know you're doing some kind of calendars with your boxcar trades, aren't you?
Yeah, good morning, Tom and Tim. How are you?
Morning, Dan.
Hi, Dan.
Yes, well, sometimes I add a calendar to it and sometimes I don't. I have been doing quite a few diagonal calendar combinations. As a matter of fact, I'm just now working on one even as we speak, and they've been actually doing quite, pardon me, quite well, surprisingly, for calendars and diagonals, but it all depends on how you set them up, of course. And, I'm going for the premium rather than the directional aspect. So yeah, I like calendars and diagonals, and they can be superimposed on trades like Tim's or a boxcar style trade. So yeah, they're very versatile and they're relatively low risk, which is obviously a good feature.
Dan, do you do you have any consideration about Vega or volatility? I mean, are you using them to neutralize Vega or anything like that?
I do on the boxcar style trades, but when I set up the individual calendar diagonal combinations, uh, not necessarily.
Okay.
Um, so, I mean, for example, well, I, I just now ran a power options and Marvell Technologies popped out and I'm working on that, which I guess I can show you what I'm trying to do if you want to see it. But basically, Marvell has strong buy technical features, technical parameters, I should say, and also from analyst ratings. So did you want me to show that, Tom?
Yeah, sure.
Okay. Yeah, let's
Um,
see here.
I think Tim, you need to stop sharing yours. Oh, there
Yep.
we go.
There you go.
Okay. Should be able to see it.
Oh, you do. Yep.
So on my power options, I have two different calendar diagonal type of searches that I use. this one and this one, but generally this one, the bullish diagonal short term, gives me the best results. And I think I showed this once before, but just to summarize here, I'm going short DTE for the short leg, a little bit longer for the long leg. I need to have a good credit, need to have decent downside protection, and need to make decent money if it's unchanged. And but other than that, the criteria are relatively pretty easy. I do like to have a positive delta ratio. That's the ratio of the delta of the buy divided by the delta of the sell. So this is the range that I like to see on that. And so Marvell popped out, and as you can see, it has a delta ratio of 1.44, which is what I like. And it's a decent premium. The other consideration for any diagonal, of course, is the ratio of the debit of the spread to the strike difference. That needs to definitely be less than 1. And the ideal is around 0.75 or 0.8. This one's, I mean, those are hard to find because you give up a lot of premium, but this one's okay. And so this one popped out, and this is what I look at to start with before I set it up on Thinkorswim. So I'm looking for a good profitability zone here and a very low downside risk. That's what I'm looking for. And of course, this is cheap, 363. And if this is unchanged, 50%. Of course, you're not going to get that because I'm not going to be in there that long. So this is a pretty good candidate. And as you can see, I'm selling roughly at the money or slightly out of the money because that's the way I have this set up. And of course, I'm buying one that is in the money. So this is leaning directional. But then what I do is I superimpose a calendar on top of that. So this is directly from what I just now showed you, this one. And I'm likely going to do 2. And then I'm going to superimpose, you know, either a calendar or a diagonal. In this case, it's a diagonal because the strikes didn't match up. Usually I do a calendar. And the long leg does not necessarily, for the additional superimposed calendar or diagonal, the long leg does not necessarily have to match up with the long leg of the original diagonal. That doesn't matter because I'm not going to be in the trade that long. So this one is looking actually pretty good. I was just about to click the button. And so you can see as I'm moving the mouse over here, downside risk is very low. And it is leaning directional, but it still has a lot of potential even way up here. So what I do on my spreadsheet is I just sort of eyeball this and I pick a point over here and I pick a point over here. And those are the downside and upside trigger points respectively. And then on my spreadsheet, I have an RTD link that brings in the last so I can see where I'm standing relative to the goalpost. And on the day steps here, we get an extra day here. This one goes out, yellow line is the 22nd. So it's not a big money maker, but I have lots of these. And believe it or not, these are currently my best winners. They, you know, I like my long collars and I have several of them, but these are actually beating the long collars, although the long collars have less risk, of course, because I have a long put. And these are even beating the boxcars a little bit. So that, and I might bump this one up to a 3 lot. So this is still, I'm going to get, I'll get a buy on this trade for a cost of not much more than a thou. So the yield, let's say I took this one and took 240. I don't know that I would get that, but anywhere around 200, that's 20%, of course. So these have been doing well for me, and the other one I like, and I don't use power option on this, is I have one running on the Russell basically all the time uh, for 2 different accounts, and these are doubles. I don't usually start these as a double. I start as a single, and then the market will tell me where to add the next one. And if we have a big move, I simply leapfrog. So in other words, if we moved way up here, I would leapfrog this one to over here someplace. So that's it. I don't want to take up too much time.
Well, it's looking good, Dan. So you said you had a lot of these. Just curious if the market has a big move down, how do you handle adjusting all those, or what do you do?
Well, generally, if it moves down a moderate amount, that's actually fine because these are long vega trades. If they move down a lot, uh, I will maybe either, of course, some of them might actually be profitable unless they drop like a stone immediately, which they don't usually do that. Some might actually be profitable, and then I just would take them off. On the ones that were perhaps taking a small loss, I'd make an assessment of whether I wanted to leapfrog on the other side. So let's see, just as an example here, let's see what else I have here. See, this one, yeah, I thought this was a collar, but no, it's not. So this is an example. This is AstraZeneca. Of course, they're profiting from the vaccine potential. They may get a share of that. And this is a double. So this would have to, I mean, this would be a fairly decent down move, but you see, I'm already up quite a bit of money. And if we move down here someplace, I would make an assessment. Actually likely if we're down over here, I would probably leapfrog this one, depending on the time remaining. This is a 7 AUG. So that's the way I handle these.
Looking good. And then I know you said you had some box cars, but these are kind of your they're doing better. What
They're
kind of
doing a little better. I mean, the box cars are doing okay, but these are less work, shall we say. The other interesting thing I've been finding on the boxcars that kind of surprised me, and this has been popping up on the power options, because I do a naked put type of search, and then I convert that to a boxcar. But as you'll see, the Qs and SPY and the diamonds have actually been popping up, and they've been doing actually pretty well. And I have a diamond boxcar that's doing well. I had to take off. So this was a 10 lot, and actually I have 2 different cycles, as you see. So that one is profitable. I took off the put debit spread, so this is just going to expire, and I just will take my money. I still have a little bit of theta in it, so it'll gradually percolate its way up to the cyan line. And then this is the 31, and the only thing I did, I had a 5-lot debit spread, and with the move up today, I took off 1. Still have relatively low risk to the downside, and if we had a big drop, I would address that. I would probably add another debit spread, and then I would pay for a part of that by selling a put credit spread way down here. And that actually works out pretty well. I try to pay for half of an additional debit spread by selling premium way down below it. So that works out pretty well. And then I have one on the Qs. And that's working out fine.
Yeah, that one looks good.
So, I mean, it's kind of surprising that they would pop up, but what I have learned from the power options is I generally take stock of what it feeds me, because the way that I have these set up, the data is actually, even though it's 15-minute delay, that doesn't make any difference, because I don't even put these on until around, till the market's been open at least an hour. But I've been getting good information. So the 2 screens that I use are the naked put, and then, as I said, I will reconfigure that to maintain the boxcar parameters. And then the other one is I have a bull put credit spread, and I have it set up to be wide. And for the list, I think I've pointed this out before. I have either top performers, and those are ones that I have made money on in the past. I keep a list of everything that I've made money on in the past. And then I also use my watch list number 1. And this is a list of all stocks that have weekly options, but they also have to have a minimum volume requirement. And so you can see, and we run a search on this. So I get a pretty good mix of stuff over here. And I don't necessarily take these strikes, because generally the deltas are a little bit, high for me. But, for example, NVIDIA, I've had many winners on NVIDIA. I like that stock. So you get, something like that, and then I will convert this, to a boxcar. So, so that's the way I do these. And, I have a reasonable mix of what I like. What I'm doing now is, I think I mentioned a couple of weeks ago when I was on, I'm trying to diversify both according to time and to volatility, and some directionally. So I'm trying to get a mix of things.
I know somebody wrote me a question asking how often you use calendars on your boxcars. Is that fairly frequent, or?
It's fairly frequent. I don't start them with a calendar, I think, and I'm not sure whether Amy does either.
I
I
don't
don't,
think she does, but I haven't
yeah.
kept up with it.
I mean, you have to sort of watch them, and you have to determine what the upside risk is on the calendar itself, at the point at which you would have to take it off. And at the same time, of course, you would have to be adjusting the boxcar itself, if the market ran up a lot. So the upside risk is a little more. What I do sometimes is I will put a calendar above the market. And because I know that if the market drops, the boxcar will be making money and the calendar will be losing a little money. So that's another consideration. But they are good for reducing your overall vega. And since the back leg is not that far out in time, the vega contribution that it gives is decent.
And Mark Winston says Amy is adjusting with calendars. So that makes sense.
Yeah, yeah, she uses calendars. I think we discussed that, she and I think. But she's pretty sharp. She's very good at these things, and uh, from I look at some of the things that she has done because they pop up on my screen. In fact, she invited me to join her tomorrow for the roundtable, so I'll try to make that.
Okay, I'll
Um,
add you as a presenter, and you should get a separate email for that if you like.
okay, well, yeah, okay, but I mean, she'll run the show because she's running the service and doing a good job with it from what I've been able to see.
Yeah, I think the
Um,
performance is fine.
yeah, I haven't seen her equity curve, but which I guess is none of my business because I didn't pay for her service, and I don't need to see it. But just from noting her comments that she's up 7%, she's taking it, or things like that, I would guess that she's doing pretty well with it. And she and I trade somewhat similarly, although I generally go for a little more money than she does. But having said that, she's probably wiser than I am to take the money when she has it.
Well, I just found her. This is on the public part of the site, the trade performance for the boxcar. So there's her equity chart. It's still fairly young because it hasn't had that many months yet, but overall she's up 12% in 3 months, which is pretty good.
Yeah. So should I stop sharing, I guess?
If you
So
like.
people can, because my screen is still showing, I think.
Yeah, we see your power options.
Yeah. So I'll stop that unless there's any other questions.
I don't think so.
Okay. All right. I'm out.
All right. Well, thanks for the update, Dan. Always appreciated.
Oh, sure.
So, how are things going for you in California as far as COVID and all that stuff?
Well, I mean, nobody likes this, obviously. I was talking to Lynn yesterday. I mean, I remember when I just got out of medical school in in uh, 1970. I graduated medical school, and I remember thinking to myself, "Ah, 1970. Maybe I'll live to be 70. I don't think I'll live much longer than that." Well, turns out I did live a little longer than that, but what I never envisioned was, I mean, naturally being a young doc, you think of all the not only good things but all the bad things that can happen. This never came up. I mean, obviously, I had taken that epidemiology course in medical school, and we studied all sorts of pandemics in the past, and epidemiological studies of things that happened in third world countries, hookworm, and I can't even remember all the worms now. There's a variety of them, but just never, uh, it was never even discussed that something of this magnitude might happen here, even though obviously everybody knew about the Spanish flu of 1918. We knew about that. This was obviously prior to the Asian flu. Um, we were not having much in the way of national or international terrorism, so the anthrax thing never came up. So, long story short, I never envisioned anything like this. But having said that, um, California has been pretty proactive, and we were doing great. The thing that happened were the big weekends, Memorial and July 4th. And obviously our beaches are very attractive, but Lynn and I both like Governor Newsom here. He's on top of the data. And in contrast to governors of other states, shall I mention them? Georgia and Florida, for example.
Oof. Yeah.
Uh, Um, he is science driven, and he's a sharp cookie. And they may wind up shutting down LA again, but anyway, most people here, there's not much in the way of mask animosity. There are a few, isolated individuals, but I mean, when I go into town, everybody's got a mask on, and everybody seems to have adjusted. And the retail stores, for example, Starbucks, it's kind of funny. They have little painted lines for routing you to the counter or routing you to get a mobile order pickup, which is what I do. And I I punch it in on my cell phone, and it's already paid for on the cell phone, of course, on my account. And then I go up and they know me and I get it and I walk out the door, and I'm in there literally for 30 seconds. So a lot of retail stores are doing things like that. They'll have curbside pickups. The restaurants, you have pretty good takeout service. Some of them, we got some Mexican food last week and they brought it out to my car. So long story short, most of California, I'm guessing, is sort of adjusting to this, perhaps better than some other states. And I don't want to pick on any other states. I lived in the South for many years. I was in the Air Force in Florida, and so I know the Tampa area, and I've lived in many areas of the South and in the Midwest. But I do know that there is a certain element of the population in the South, for example, the same ones that are enamored of the Confederate flag. They're reluctant to give up what they see as the constitutional right to not be forced to wear a mask. But we don't see too much of that here. That's a long-winded answer to your question. So things are going pretty much okay. It would be nice to open up more so we can do things, go down to Big Sur and go up to Half Moon Bay and maybe take a little road trip, things like that, but not yet.
Yeah, we're thinking about a road trip, but we're a little concerned about, hotels and all that kind of stuff. So I think if we go on a road trip, it's going to be in an airplane that we fly.
Yeah. Well, that's a good idea. Yeah.
Yeah, it'd be a little safer. And Rich Lysakowski says, rednecks have the right to die just like everyone else.
uh, that always reminds me of that old Randy Newman song. Uh, line goes, redneck, I'm a redneck. I don't know my blank from a hole in the ground. And of course, he didn't say blank.
Yeah.
But if you remember Randy Newman, you may not.
No, I don't know him.
Well, he has written quite a few songs, but he also is a talented musician, and he writes scores for movies and things.
Okay.
But yeah, I don't know what he's doing now. This was 30 years ago.
Well, and Mark Winston says, don't have a constitutional right to walk down the street uncovered below the waist. And to me, it's okay, you have individual freedom, but you also have social responsibility. And when your freedom impinges on somebody else's freedom, then that's a problem.
Well, that's true. And I see that Rich just now popped up Short People. Yeah, that was another of Randy Newman's songs.
Okay.
And he also had I Love LA. Those were three of his big ones, I think. But he's also written scores for movies. And I think he may still be around because maybe 8 or 10 years ago, he actually had a little video thing of him riding around in a big convertible in LA. And of course, he was, hawking his song, I Love LA. And he had, he's driving the car, tops down. And he's got 3 blonde California babes in the car with him, and he looked like a happy guy.
Well, I found him on Wikipedia. He looks like he's still happy. He's 76.
Yeah, he's about my age.
Yeah. I'll have to look up some of his work. Yeah,
Randy did a lot of stuff for Disney.
Oh, okay.
Yes, he
So,
did.
Hey, Dave.
yeah,
Hi,
hey
Dave.
guys. Hey. Yeah, he did like Toy Story, Monsters. I'm just looking, he's got about 3 million monthly listeners on Spotify.
Oh, wow.
That's pretty good.
His most popular one was You've Got a Friend in Me. That was from Toy Story.
Oh,
Yeah.
yeah.
Yep. That's right. Yeah.
Yeah, that
Well,
was
some
back
of us,
that was back in 1995.
some of us old codgers are still going strong. So I'm glad that Randy is.
Well, Dave, how's the Dreamlifter? I think I saw on the performance page you're up a couple $100 on your second trade already.
Yeah, it's the last week when I think it was last week when we put it on, it was we had some pretty good market moves, and I think we were right out of the gate we were down about $700 or so, but it has since within a few days kind of recovered from that and made some small adjustments. And I think from my discussion with the subscribers yesterday, we talked about the whole aspect of volatility and I guess the inexpensive butterflies that are around today versus in the past, especially if I looked at the RVX, which is up around what is it, around 35 or so, with the VIX around 25. These are, if you look back a few years ago, they were both half that much. So as it turns out, butterflies and capital that's required for these trades are about half. So that sounds nice, but if you the dollars potential are less, because if you've got less capital in the trades, like normally would have 25,000, and now the trades only had about like 8 to 10,000, just because the butterflies is so darn cheap with the volatility, relatively, or higher compared to the norm, which is probably it's probably about double what the norm is right now. Obviously, it's nowhere near what we had gone up to. I mean, I think the RVX was up to, what was it, Tom? It was close to like 90, back in late February or so.
Yeah, it looks like the high was 88.79.
Yeah, so really close to 90. So it's almost, if you say, it's almost close to 2/3 less than that right now. But it's interesting, and who knows, the fear factors that are built into the market. I mean, a lot of the, with everything with COVID-19, as Dan was just talking about, and you and Dan were just talking about, I mean, nobody likes this.
No.
I mean, certainly up in the Seattle area. I mean, on a personal note, I mean, we've got, my daughter who's working at, or both my daughter and son-in-law, they're both working at companies. One, my son-in-law can go into work, or actually is required to, whereas on the flip side, my daughter is required to stay at home. So, that means, we have a joy of our life. We have our 2-year-old grandson over at our house every day, which is a true joy. But, it changes dynamics, I mean, their pod, as I say, our pod of people that we have that we feel comfortable with, is small. And, my son-in-law, every day when he comes home from work, he's got his mask on. He, takes his, gets his, showers up and does his thing to kind of get rid of things because he has no choice at work. So you have to, try to limit, your pot of people, and that's hard. It's very, very difficult. And, we had some friends over the weekend who are moving to Florida, and you know, it was just the four of us, but we made sure that we were outside and we were at least 6 feet apart from each other, except for obviously my wife and I and our friends. You know, couples were close together, but the distance apart from couple to couple was at least, you know, 6 to 10 feet. And we were outside. It was a beautiful day, so you know, we were not wearing masks. We could have, but you know, we also know these people very well, and we know that they've been extremely good because they're also watching their grandkids at home too. So, you know, they've been keeping very, very good and not doing anything unusual. So, but it is kind of weird because you have to have these conversations with people that you've never had to have before.
Yeah.
So it is strange. And so even, you know, my wife and I got invited over to a friends that we've known for like close to 35 years. And, you know, we had to ask the question. You know, it was kind of weird, you know, asking the questions like, okay. And they said, oh, don't worry, we'll be outside. We'll have, you know, distance apart. We'll have this. We'll have, you know, it's like people are really, you know, trying to be really good about it, which is smart. You know, people aren't just, you know, unfortunately, you know, some people like my son who works at a restaurant, you know, he's in, you know, and you know, whenever he comes over, unfortunately, I feel like he's kind of a bit of an outcast because you know, he's coming over with his mask, and um, you know, it's this, you know, he's not allowed in the house, and
Yeah, I
so
think you said you have exercise equipment in the garage that he uses, but it's kind of
outdoors. Yeah,
separated. Yeah.
I hang it from my basketball hoop in my driveway, the little TRX strap that he comes over and uses because you know he can't go to the club. So, and then when he leaves, I spray it down with disinfectant and all this kind of stuff. And, you know, we keep our distance for sure. And so it is this weird, I mean, we've never experienced stuff like this. It's very, very strange. So anyway, but we're trying to deal with it up here in Seattle. I guess sounds like compared to like what Dan was saying, as far as people generally in LA or in around where he is, I tend to say this to see the same things here as far as willingness to put on masks and stuff like that. But what we see up here, which is unusual, I think, is that there's a tremendous amount of people that are working from home. As a lot of people within the technical or high tech group here, you know, between the Google, Facebook, Microsoft, there are you know, a huge, well, like my daughter who works at Microsoft, she can't go into work. I mean, they're relegated to be at home, which is the reason my grandson is here every day. So because
It's
she
like my
wouldn't be.
oldest son. He works for Indeed.com in Austin, and they've closed all their worldwide offices, so all their employees are working at home.
Yeah, yeah. So it's a different world. And as a matter of fact, my next door neighbor here, who also works at Microsoft, I was chatting with him the other day, and he told me that, you know, he fully expects that right now it's through October, but he fully expects it to be at least through the holidays, meaning the end of the year, and probably somewhat into 2021, where they will all be working from home. So
Yeah,
but because of that, in this particular area, um, you know, there's a tremendous. I mean, the thing that's weird around my neighborhood is during the day, you know, where my wife and I would go out for a walk during the day, and you know, we maybe see a person walking around. Well, now it's like you know, the Indy 500. I mean, there are so many people working from home that everybody is out walking, which I
right.
guess is a great thing. But and it's kind of funny because you walk down the street and people are, you know, so some people are wearing masks, but a lot of people are not because you know, we live in kind of a suburban area and there's plenty of room. And when people are walking down the street, people are very, very good about, if they see a person in the distance, they'll go off to the other side of the road. If we've got my grandson in his stroller, you know, the people will hop over, you know, 2 lanes and they'll be on the other side of the road. Or if there's more people, some people will then go in the middle, you know, so people are always, you know, 15, 20 feet apart or something. So, and just for that one little passing aspect, but, you know, it's, you know, I think people are, you know, recognizing, and I guess our governor up here is aligned with Newsom and I guess a lot of the other Democratic or science-based governors, and they're doing the right things. We're having some problems up here right now, but a lot of it is still over in eastern Washington, over where a lot of the agricultural, basically it's where people are working very, very close together, and a lot of it is agricultural workers and meat processing plants, vegetable processing plants, all that kind of stuff. It seems to be the hot spots here.
Right.
So
Yeah, Colorado is similar. We have mandatory mask wear in indoor public areas, but we go out on walks. Obviously, you're outside, and people are similar. They're avoiding each other pretty well.
oh yeah, I mean we're like, if my wife and I go to take a ride and grab some food at the local Taco Time or the little McDonald's or something like that, we have our masks in the car and we go to the takeout and we'll always have them on, both my wife and I. And the person that's giving you the food is fully masked, usually gloved, masked,
Yep.
everything. And we've got our Purell in the car, so whenever we get it, we always Purell our hands. And and my daughter has got into I don't say the business, but she's made all of our masks. So we've got really some funky looking masks, which are quite colorful and kind of neat. But we can take them, just throw them in the wash, and so it works out pretty well.
I saw this one teenager was, I don't know if she has friends or family that are deaf, but she said a problem is a lot of people who are deaf lip read, but with a mask you can't do that. So she made masks with little clear windows where your lips are, so you
I
could actually
saw that.
see the lips moving. I thought that was really clever.
I saw that on the internet someplace. I thought that was pretty cool.
Yeah. Well, glad the Dreamlifter is going okay. Do you have a second just to show us how your trade looks right now?
Yeah, sure.
We have a couple minutes left.
Yeah, sure. It's not too exciting, but
Well, making money is always good, right?
yeah. Let's see. I'll just share my screen here. Just let me know if you see that, Tom.
It's coming up. Okay, I see Option Net Explorer.
Okay, so this is the current trade. Basically, just it was originally a 10 lot, but we added in a little bit yesterday, and we'll most likely be adding in a little bit today. So we're keeping it very simple. Right to the this is one right by my guidelines and stuff like that. So it's got about 71 days. We put this on about 11 days ago, so we put it on when the DTE was around about 82. So we've been in it about 11 days, and obviously we'll be looking here to one of the things that always we look for is the ability to be able to take this off a little bit earlier than normal to kind of increase our times to bat. And if we take a look at our next opportunity, which would be right here, which would be the October 16th expiration cycle, even though we've only been in 11 days, if within the next 12 days, meaning that if the DTE of this next expiration cycle gets down to 75, or somewhere between 75 and 85, and if we get up to a certain amount of P&L, then we'll just take it off and then take some profits and then just move into the next expiration cycle, just like we did with this one. Because I think the first one I was only in, I think, about 10 days, if I remember correctly.
Yeah, it was a quick profit and in and out.
Yeah. And so it made, with the margin, as you can see down the lower left here, we've only got about 13,000 in the trade. And we would have we would have less than that, because if you take out what I put in here yesterday, it was just a little bit over 11,000. And when I did all my back testing, the back testing was done at 25,000. So we're less than half. So our percentage that I'm looking at, as I explained to the group yesterday, the percentage that I'm looking for is still the same. So we're actually slowly going, and just as the market dictates, so the market moves, we're just kind of adding in capital as the market moves, as opposed to necessarily making, classic kind of, just small little adjustments for delta. We're actually moving in and putting, actual more capital into the trade, as opposed to, leaving it, so far undercapitalized.
So would you basically add more dream lifters on top of this one, or just how do
Yes.
you do that?
Yeah, well, just like yesterday, like the one I showed you right here, the one I put in yesterday was this one right here. This is what I added in yesterday, because before that I just had a simple 10-20-10. So just added one in.
Right.
And basically I'm looking at that, based upon, we could put it at different strikes. There's nothing holding us, because, this is, there's nothing in the guidelines about specifically which strikes that we're using, but basically it's, up to me to, figure out what's best for the trade at that point, and to, depending upon how the trade is doing, at that time, and what the market is doing. So, but we're trying to keep the trade, utilized from a capital standpoint, somewhere in the 20 to 25,000 range, which is, what what I did with all the 9 years of back testing that I did. And kind of interesting, because I did go back and actually check to see if we had ever had experienced margins that low during the last 9 years. And the funny part is that we did not. There may have been a few days that we got above 35, but it was only lasted for literally like a few days. If you take a look at, think or swim, and if you take a look at RVX, you can see in the chart that it's over the long period of time, we're definitely, we've been sitting up in the high zone for some time now.
Yeah, it is very unusual. I'm looking at a chart of VIX, I think it is. Let me see. Yeah, and it's like you said, we had some spikes above, say 30, but they never
Mhm.
stayed very long. But this is very unusual, where it's staying so long for such a, so high for such a long period.
It is, but just like with anything else, I think that what we've learned, or something that, I learned from Dan and others along the way, is that, we all need to be, nimble in our trading. And as we have the ability and the knowledge and the experience to recognize some of these things, you need to not only recognize it, but then understand what is the best action to take from it.
Right.
So, so it's important, as opposed to just saying, no, I just want to, here's a rule set, and, we're absolutely, within those, that box of rules, and no matter if the market goes and does something different than it did in the last 10 years, oh, sorry, we can't do anything about that. Well, I disagree. I think we need to be nimble. We need to be smart. And that's part of my reason yesterday that I, chatted for at least about a half hour or so with the group, and, went over my explanations of, of why I'm doing what we're doing, and why we're, addressing what's going on, and doing it, I think, in a thoughtful way.
Well, looking good, Dave.
Yeah, we'll just keep on going, and thanks for helping out with the my link there this morning, Tom. I couldn't quite get in, and I still, if we have a chance, if we could maybe do a little test Zoom, me and you, I would appreciate that, just because we seem to have problems yesterday switching screens and stuff. So I'm not sure what I'm doing wrong, but it's thought I knew how to use Zoom pretty good, but I guess not.
Yeah, well, the main thing is when you share a screen, don't share an application, share your desktop, and then it usually works fine.
Yeah, I was basically doing this yesterday. I was just like this. I was screen sharing, and then I would switch over to, like, think or swim, and it wouldn't switch.
Well, try it now. It should work. I mean, you're sharing your screen, right?
Right. So did think or swim pop in?
No, I'm still seeing OptionNet.
Right. This is what happened yesterday.
Now, when you shared it, did you share an application or your desktop?
I just went in Zoom where it says screen share. I just hit screen share.
Yeah, then it asks you, what do you want to share? Do you want to share your like a screen, or do you want to share an application?
Yeah, it just had like a whole bunch of windows, and I just picked the one that showed O&E.
Oh, well, make sure it says like screen one, or this is like a desktop, not an application.
Okay,
And I can do a little demo video for you.
okay, okay. But this is exactly what happened yesterday.
You couldn't switch. Yeah, okay. No
Yeah,
problem.
so for example, if I said stop share, right, now it just stopped, correct?
Yep. And then if you hit share screen,
So if I hit share screen again,
you should see something that says screen one, screen two if you have multiple monitors.
yeah, okay, so I see screen one, screen two, and then it says whiteboard, iPhone, then option at Explorer, and that's the one that I chose, but maybe that was the wrong thing to choose.
Choose the one that says screen.
Ah, okay, so if I do screen one and share it,
Okay, now I
uh,
see like a ocean kind of thing with palm
okay, well,
trees.
all right, that's my laptop, but that's not my other one, so I guess I need to share my other screen, which would be this one. And let's see if you now see O&E.
I now see O&E. And I
Okay,
see also your Windows bar down at the bottom. So if you switch to something else, we should see that.
okay, good. So you see all the tabs down below and everything?
Yeah, I see your mouse moving. Yep.
Yeah, okay. Okay, good. All right. Well, I think that solved it. I was going instead of screen one, screen two, I looked where it showed option at Explorer and I said, oh, there it is. And I figured that was the screen.
Ah, well, you did share the right thing, but then yeah, you can't switch. You have to stop and then reshare. So,
Yeah. Okay. Well, good. Well, good.
all
We
right,
we resolved it.
excellent.
No reason for a video.
All right, we got it fixed. All right,
All
and then
right.
tomorrow, like Dan said, we've got Amy, and we'll be on doing the boxcar trade for the roundtable. So we'll have that tomorrow, and if you miss it, obviously it's recorded, and then we'll all be back next Tuesday for Trading Group One. So hope everyone has a great trading week. Thanks everyone for participating. Tim, Dan, Dave, really appreciate it, and we will see you all tomorrow and or next Tuesday. So thanks a lot, everyone.
All right. See you, Tom.
Bye.